live on YouTube. We are live in the room. Good to see everybody today. On this 21st day of August, it is a Thursday. We're almost to the weekend. And as Loverboy once said, everybody's working for the weekend, right? Not day traders. Day traders hate the weekend. It means they can't take trades. It's funny how that works. Good morning, Andy Man, Chariot, Derek. It's great to see you guys in here today. Good morning, Sword Trader. That's a newer name. Good to see you in here. Guys, hey, Andy V, Diamond David. Good to see you, man. I like it. We're getting some folks in here. We got people coming back. We got people starting out. So let's do the little rundown. What are we going to do today? Well, first, we're going to check news, guys. Good morning, 8 Ticks. We are going to check news because news has the potential to, may make the market spike, jump, bump, do all the things that we don't want it to do. So it's not a guarantee that the market's going to go crazy, but it has the potential to go crazy. And everything that we do, or everything that I teach, I won't say that we do because I don't know what you're going to do. You're in charge of what you do. Everything that I teach revolves around a pattern, guys. It is something, no sound. Guys, give me a Y if you can hear me, please. I want to see if it's me or Jerry S. Anybody? Yep, okay. Cool. So if you guys are new to the room, every now and then you may not get volume. And I don't know why that is, but if you reboot the room very often, it'll fix it for you. Thank you for the yeses, guys. So if you ever have no sound, ask, tell me. And if you see a flood of Ys come in after you ask, you know that everybody else can hear me just fine. I don't mute anybody so I can say important things that you can't hear. Got in trouble for that. Good morning, Mike M. So guys, at 9:45 a.m. we have the Flash Manufacturing PMI, Flash Services PMI. Right behind it at 10 a.m. we have existing home sales. It's a lot of news in a short span. Awesome, Jerry. And all of this news has the potential to break up our patterns, to mess up our patterns, to make the market trade faster than you can read your indicators, to change direction. Hey, John, good to see you. So every morning, news is my first stop. I wake up, I push the go button on the coffee pot, I come downstairs, and as I'm opening my workspaces and charts, I go to news. And I just say, okay, at 8:30 a.m., I went upstairs 10 minutes before, said good morning to my wife, made a piece of toast, had a good time, did anything other than jump in front of the market. Well, that one was a dud, but I knew that the potential was there. So at 9:45, guys, somebody set an alarm on their phone. Someone tell Siri to remind them the market may go crazy. It can disrupt our patterns. And that's what we're going to talk about this morning, guys. I have users in the room that are using NinjaTrader. I've been on NinjaTrader for the last 6 years. You put lines on your charts as reminders. That's smart. I like that. That's really smart. Never even thought about that. There's going to be two platforms that we look at in the room. There's a lot of you that are on NinjaTrader using dynamic Rico bars, and there's a lot of you that are on TradingView using minute bars. One is not better than the other. One is not a superior platform to the other. I'm going to be very, very diplomatic. It's just two different ways to approach the market, two different platforms to run the indicators, guys. And I'm going to teach both of them today. And everything that I teach, no matter what platform we're looking at, every time I look at a chart, every time I think, okay, it's time to get going, it's time to make money, there's three things that I'm going to look for. I'm going to ask myself, do I have momentum? Is the market pushing in the direction of the trend? Do I have an advantage? Is this market going to be difficult to stop because of my indicator read? I'm going to teach you how to do that read. I'm going to ask myself, is there anything in the way that could create a bounce? Is there anything in the way that could stop the market? Is there anything in the way that could terminate the trend? And if there's not, then I'm going to say, all right, I'm working with a clear path, guys. And when I'm working with momentum, and a clear path, I'm going to use that idea that there will be a pattern for entry based on those two advantages. I'm going to give you guys, well, I've already dropped in the room for everybody in the room. They're at the top of the chat. I've dropped in a TradingView plan. This is a user plan, and it's going to give you everything you need to not trip up when using the software, all the way down to checklists for entry. And I don't know what I did. If anybody knows how to get back to the normal layout, let me know. Can't do it. That's not it. I don't know what I did yesterday, but I did it wrong. Oh, there we go. Cool. All the way down, guys, I'm going to give you a checklist. I'm going to give you an if-then for TradingView. That's the TradingView plan. And then I'm going to give you this exact same thing for NinjaTrader, the KISS plan, the Keep It Simple plan. I should turn the TradingView to the KISS TV plan. And all it is, guys, it is a couple advantages, a checklist to follow for entry, and the NinjaTrader even gives you a way to manage. So those have been dropped in the room. Most people don't look up, so I'm going to drop them in the room again. Along with the plans, guys, are the spreadsheets, and the spreadsheets are just pictures of what it looks like to have the rules met. Whether it is TradingView or whether it is NinjaTrader, guys. And the NinjaTrader one, because it's been around longer, has like over 500 pictures of Nexgen users doing great things with the indicators. But everything goes back to momentum, path, and entry. Momentum, path, and entry. So no matter what chart you're looking at, NinjaTrader or TradingView, we're always going to go back to momentum, path, and entry. And when all three are there, we're going to say we're in a high probability scenario. This is the best of the best. These are the trades that typically win more than they lose. This is my edge. This is my advantage. This is where probabilities say I can become a successful trader if I just stick to the path. If one of your advantages are gone, if you look at your charts and you say, man, I don't really have momentum, but I still have that clear path in an entry area, you're going to put yourself in a medium probability scenario. If you look at your chart and you say, dagnabbit, carnsarnet, egads, and little fishes, 2 out of 3 are missing, well, this is low probability. And guys, it's going to become difficult for you to want to invest your money into a low probability scenario. Some of you will. It's not the one that's going to win more than it loses, and you're going to be leaning on luck a little bit on that one. Remember that you're in control of the entry, you're in control of whether or not the rules are met, you're in control of the management. So knowing what's working for you or knowing what's working against you gives you the opportunity to decide whether or not you want to enter the market. It lets you know how aggressively, how assertively you may need to manage the trade. So everything is going to go back to those, guys. And what we're going to do this morning is we're going to learn some trigger line and Fibonacci rules. I should change this because now that we have TV, we're going to learn rules for when it's okay to trade. Guys, it's okay to trade when you have an edge, when you have an advantage, when you can literally look at your chart and say, wow, I've got all this great stuff. Let me find a way to capitalize. Everybody in the room, I want you posting pictures. I want you asking questions. I want you telling me on your pictures what you see. So if you post a picture in the room, I want you to talk about the momentum that you see. Because very often, if you make a mistake on your chart read, we can fix it almost instantly. So the words that you put on your chart, the annotations that show up on your chart, let me know exactly how you were reading the indicators. And my job in this room is not to tell you when to enter a market. My job is to teach you to read your indicators so that you can make good decisions when you enter the market. Talk about terminations. Talk about whether or not the path was clear, if it had the potential to break. Tell me what you saw, and then show me where you entered, and show me where you exited. And please feel free to tell me why, because I'll help you build your own management plan. But what you're doing is you're saying, Mark, here's my chart. Here's how I read it. This is why I did what I did. We had an instance yesterday, I won't say who, and it was one little phrase in his annotations, and we changed the whole dynamic of his entry plan based on the one little phrase. because he said he was entering inside of triggers. And I was able to go back to the language and say, but it's the areas inside of triggers. And now this person, when he trades today, is going to be that much better because he told me what he saw and he told me what he did. And guys, I'm telling you, every day you will get better with the software. If you are brand new with me, there's language that you're not going to understand. There's phrases that are going to be a little foreign. Give it 2 or 3 days. You'll fall into line. You'll see trades, and you'll know that this works by the 4th or 5th day of your demo. So we're going to learn rules. I want you guys posting in the room. I want you flooding this room. I want you almost thinking like you're doing too much. You can't. You can't take too many pictures or post too much. And then guys, we're going to keep it simple. For the brand new user, the further you deviate from simple, the longer it's going to take you to get to where you want to be. Both plans that I have dropped in the room are designed to optimize your chances of success. They are by no means everything that you can do with the software, but both of these plans teach you to read your indicators. Both of these plans give you a high probability scenario. Both of these plans put you in the best chance to remain constant as you grow with the software. So simplicity tends to pay dividends. Simplicity keeps you from moving around and doing too much and looking for too much. The futures markets trade billions every day. Absolutely, sword trader. I'm going to go through the rules, where to find them, what your workspace looks like, all that stuff. And that's going to start in about 2 minutes, maybe 1 minute. I don't know. We'll see how the coffee works. But the way you guys are going to get to where you want to be the absolute fastest is post in the room. Flood the room, guys. The people that take the most pictures and post the most typically get to where they want to be the fastest. Every mistake that you make, I have made 100 times. Every mistake that you can make, I've learned how to fix. So I'm going to do my best to help you fix mistakes faster than I had to learn to fix them and get to your goals quicker than I was able to get to mine when I was new with the software. Those spreadsheets that I gave you guys, fill them out. Fill them up with pictures. Go back and study the pictures. We're going to talk indicators and then we're going to talk rules, guys. Both platforms use trigger lines. There are small triggers. There are large triggers. Triggers on Renko charts will define momentum. They'll let you know whether or not you have a clear path, and they'll even help you define entries. On your 1 minute charts on TradingView, you'll use the small triggers on the big chart, and you can use both triggers on the small chart. But triggers are triggers. They're just moving averages. Don't overthink it. Both charts will have areas, large chart and small chart. So this is a Renko chart. And on the Renko chart, you're going to see divergence highs and lows. Anytime you see a negative number print from a pivot, you'll see a magenta line from a high. You'll see a cyan line from a low. I want your brain to say to you, oh, there's a loss of momentum. There's a loss of momentum because I see divergence. This is going to come in handy on entry rules on medium probability trades. So divergence is a loss of momentum. This line, price does not reach that line. Price creates this line about 2 bars into the move down. So you don't actually reach it, it's created. Loss of momentum. On Renko charts, you're going to see Fibonacci resistance. It's the red line. In an uptrend, this could stop the market. Blue line, support. In a downtrend, it could stop the market. And then you're going to see yellow 1-to-1s. These are fibs that print in the moment. And in the moment, if the market is going up, it may behave as resistance. If the market is going down, it may behave as support. And then you're going to see mid-bands. Green mid-band means price is above it. It may act as support. Magenta mid-band means price is below it. It may act as resistance. So guys, this is your Renko bar chart areas. These are points in the market that can create a bounce. On TradingView, every indicator is the same. Divergence, 1-to-1s, mid-bands. The difference is you're going to use supply and demand zones. There's a company called Chart Prime that I would recommend. Their zones are amazing at calling potential turning points because we don't have Fibonacci yet. John's hoping to get them pushed onto the charts in the next week or two, but until that happens, these are outstanding. So these supply and demand zones behave as fibs. areas that could stop the market. Now, when we talk about the high probability trend trade, guys, this is your first trade on NinjaTrader. It's only 3 rules. And these 3 rules create those advantages that we look for to take a trade. So, large chart has strong trigger lines will create the advantage of momentum. There's the first one. Nothing in the way, no termination conditions, room to your profit targets. That's what defines your clear path. That's rule number 2. And then it's the pattern for entry, rule number 3. These 3 rules happen on 2 charts. So sword trader, here we go. You're going to have a large chart. Good morning, Pibbies. Typically, it's on the left side of your screen. It's a 13.2. This is 13.2 is just bar structure. You don't need to know the number. What you do need to know is that this is a very slow moving chart. It's a very broad stroke of a brush. It defines the overall opinion of the market. It will define direction using the color of the background. Red is down, green is up. It'll define momentum through rule number 1 using the trigger lines. And guys, it uses the first bar, most current printing bar, to define both momentum and path. Rules 1 and 2 were met on the large chart. It's important that you remember that your first 2 advantages come from a big slow chart because we don't want those advantages to go away mid-trade. Your entry chart is a small chart. There's your 5-1. I have seen people, sword traders, stack them vertically because it feels better to them. I read left to right, so I go left to right. First chart, second chart. Do it any way that feels right for you. This small chart is going to refine that 1 bar on the large chart. You're going to see 20 to 30 bars over here, and this chart's really not ever even going to blink. You're going to use that for your entry pattern, for the pullback to the area inside of triggers, and by following the methodology, by following the language for entry, you will be able to reduce risk and you will be able to increase your profit potential using rule number 3. Now, either platform, your big chart, small chart, is a reflection of who is in control of the market, and it's not you. You want it to be you, but it's not. The market, when you close TradingView, they give little messages, and my favorite message is that the market doesn't care about your position. They don't know you exist, guys. The large crowd, the people that move it, that do all the things, they don't know you're here. They don't know you're sitting in your office. And they create momentum, and they establish trends, and they react at those key areas on your large chart. Your small chart is the fighters. These are the people that think they're in control, but they're not the large chart. And they create what's called a pullback or a retracement. And the definition, the trading definition is, it is a small retracement counter to the underlying trend. So if the large chart says up, your small chart for a brief moment in time may say down, or at least the bars will go down. Rule number 3 is designed to use that fight from the small crowd to pinpoint exactly where they are most likely to fail. That becomes your entry for the highest probability trend trade, because when these guys fight those guys, they fail up to 70 to 80% of the time. We're pinpointing their failure spot through rule number 3 so that we can reduce risk and maximize profit potential. So we're going to go through and we're going to talk NinjaTrader first, and then we're going to go through and we're going to talk TradingView. If you have a question, interrupt me. If you post a picture that needs attention right then in the moment because it's what we're talking about, let me know. Hey, Mark, this is about the momentum we're talking about. Hey, Mark, this is about the areas we're talking about. Otherwise, all the pictures posted in the room, once we go through the rules, we'll go back and we'll start giving you guys feedback on everything that you do. And that's the post your trades in class. That's the tell me what you see. Because we're going to go back to these core concepts, momentum, path, and entry on every chart presented. We're going to high five when you do things great. We are going to correct when things need correction. So some of you are thin-skinned, I get it. I was too for a while. Every picture posted gets feedback. You may not like to hear that you made a mistake. You may not like to hear that you got lucky. But remember, the goal is to make you an awesome chart reader so you don't have to rely on luck, so that you can rely on a pattern that's been proven to win more than it loses. And it all starts with momentum, ladies and gentlemen. So momentum is defined on the large chart first, and it's using the trigger lines, and only the trigger lines. It has nothing to do with Fibonacci. It has nothing to do with the price bars. It is 100% a reflection of what these trigger lines look like. So in an uptrend, in order to have strong triggers, here's your little cheat code, guys. Both small and large triggers must also be green, just like the background. If the colors don't match, rule number one's not met. In a downtrend, both small and large must also be red. And if the colors don't match, rule number one's not met. And it's okay to not take a trade if your rules aren't met. So strong triggers is defined. Let's make a picture today. I've got a lot of new users. I don't want to leave anybody behind. Strong triggers is defined by a separation between the small and large. It is when your small triggers break above and away from your large triggers in an uptrend, or your small triggers break away and below the large triggers in a downtrend. I want you to picture scissors that have opened. And guys, when the scissors are open, they can cut you a check. Thank you, Jerry S. When the scissors are open, you have strong triggers. And when you have strong triggers, this is the most magical phrase. The odds are favorable for the market to continue in the direction of the trend. When you have strong triggers, it's going to be difficult to stop that market on the large chart. When you have strong triggers, it's the same look that we're looking for to break key areas. If you have strong triggers, it's even going to cover some of the mistakes that new users make. But momentum runs out over time, guys. And as those small triggers return to the large, when they work their way back inside, and when they're inside, this is weakness. So language becomes important. This is strength. This is weakness. This is odds favorable for the market to continue in the direction of the trend. This is, and I love this, anything can happen up or down. Doesn't paint a pretty picture for your investments. So rule number one says insist on momentum. And Sword Trader, great question. Your background changes. I like it when people ask the technical stuff. Your background changes when the small triggers start to break above the large triggers, or when the small triggers start to break below. So that's what paints the background green, and then it's the space that's created that lets you know that the strength is there. Does that make sense? So if you're colorblind, guys, and I've had colorblind users, smalls have to be above the large in an uptrend. Smalls have to be below in a downtrend. That's what creates it. Good question. Is everybody good on momentum? This is typically one of the easier lessons for everybody. If you look at a large chart right now, in the moment, whoa, Mark's been drinking. Not really. Dun, dun, dun. My small triggers, come on now, have worked their way back inside of the large triggers. Does everybody see this as weakness? And when I have weakness, anything can happen up or down. When I have weakness, that's when the market tends to turn from the middle of nowhere. When I have weakness, I'm looking for weakness. A lot of strength, there we go. When I have weakness, that's where the market tends to hold from the middle of nowhere. When I have weakness, that's when these key areas are more likely to hold. So let it be either or in the very beginning. Let it either be strength, let's look for rule number two, or let it be weakness, let's sit on our hands and do nothing. Once rule number one is met, we're going to stay on the large chart, we're going to stay on the first bar, and we're going to ask ourselves, do we have a clear path? Are there any termination conditions present? These men and women on the large crowd, the large chart, they react at those key areas. They react at fibs, at zones, at one-to-ones. They react at divergence, highs and lows. Decisions are made at these areas. So when we're talking about defining a termination condition, we're going to let the large crowd get to the area, guys. And that means price reaches an area. That's a very key phrase. Price reaches an area. And if all four of your trigger lines, both small, both large, remain below resistance, or if all four of your trigger lines, both small, both large, remain above support, that area that you have reached is behaving as a termination condition, which means that rule number 2 is not met, which means that this is an area that could stop the market. This is an area that could create an untradeable bounce. This is an area that could break. We'll never know what it's going to be, so your job is to sit tight and wait for the reaction. So if price reaches an area and no triggers break through, it's okay to do nothing. You don't have a clear path. And I'm going to show you guys my favorite picture. Every time you hit a termination condition, I want you to believe this is your result. It's going to stop you dead and take your money. Love that picture. Thanks, Morgan, if he's in here. So areas break. And if areas didn't break, guys, we'd be caught in a range forever. So when price reaches an area, trigger lines are going to tell you everything you need to know. Once price reaches the area, I don't care about price anymore. The decision making has been set off. Let's let the triggers do the heavy lifting. If none of the triggers, 0, make it through the area, I want you to believe, I want you to assume that this is an area that will stop all forward progress. The same way it did 20 bars earlier. When price reached those yellow 1-to-1s, 4 trigger lines remained below, and the market pushed all the way back to support. So no triggers, no trade is the easiest thing. If 2 of your trigger lines, the small triggers, get above that area, you're going to say to yourself, as long as I have strong triggers, as long as I have that awesome momentum, this is an area that could break. But guys, this is like blind date, bad dinner, can't dance, probably not going to get a kiss at the doorstep, right? This is not your best potential look. So I keep new users focused through the plan that I give you on waiting for 3 triggers to get above that area, both of your small triggers as well as your large triggers. Because when 3 triggers get above these areas, now this is your best look for a potential breakout. This is where your KISS plan that I give you gives you entry rules to take advantage of that potential to break. Man. There we go. But hey, good morning, Junior. Your area is not considered broken until all 4 trigger lines get above that area, or until all 4 trigger lines get below support. And once the area is broken, your path is clear. And your path will remain clear until you hit the next line. So if you let it be easy, if you let it be a matter of, and let's just see what crude oil is doing. 4 triggers get above resistance. Resistance behaves as support. And let's just, I mean, my goodness. Fibonacci amazes me every day. I'm not going to lie. And when I remind you guys that the market trades billions, I want you to see, this is your insight to rules, guys. Weak triggers, and there was a reversal. Price reaches yellow 1-to-1s, only triggers break through, and it doesn't break. Price reaches resistance, and only 2 triggers break through, and it doesn't break. Good morning, Miss Cindy. Support, divergence highs, yellow 1-to-1s, resistance, support. And you're probably saying to yourself, how am I ever going to make money if the market keeps stopping at these areas? Guys, the easiest trades that you ever take, the highest probability trades that you ever take, will be trading away from Fibonacci resistance with the advantage of momentum, trading towards Fibonacci support with room to make money. And the same is true going the other way. With momentum and a clear path, these little tails on your large chart, that's your small chart entry rules being met, guys. That is the market pulling back to an area inside of triggers, and you're going to be able to circle those tails when you have momentum, when you have the potential to break, and you'll be able to go back to a smaller, faster chart to determine whether or not the rules were met. to give you an advantage to enter the trade. And I can tell you it looks a lot like a very describable pattern. When the rules are met on the large chart, when I have, that's the wrong one, my apologies. When I have strong triggers, when I have a clear path or at least that potential to break, rule number 3 is very specific. And rule number 3 says you are going to buy or sell a pullback. You're going to wait for the fight from the small crowd. You're going to buy or sell that pullback and wait for it with a limit order. So that limit order is waiting to buy or sell the pullback at an area. Trend trades originate from areas. Trend trades originate from fibs, yellow 1-to-1s, or a mid-band. So when you talk about entry rules, these areas, the same way they can stop a trend on the large chart, can stop that fight on a small chart. But here's the key to having the best of the best, to having the highest probability of success. You're going to use a limit order to buy or sell a pullback at an area inside of those large triggers. So on your entry chart, on the 5-1 chart, you have 2 sets of large triggers. These trigger lines will define where the retracement is most likely to occur, where these down bars are most likely to go down to. The areas inside of triggers will define where the market is most likely to bounce. So buy or sell a pullback, in this case, buy a pullback at an area inside of triggers. And guys, I want you to write that down, because when you remember that recipe, it's going to save you from an awful lot of heartache. So let's look at it for a long trade. Let's look at it for a short trade. And if you're the study and sort, like I hope you are, there's both entry sequences for long and short in the spreadsheet that I gave everybody in the room. But I'm going to scroll over here because I've got 20 million pictures because I'm trying to be good at this stuff. Here's what it looks like when you're going to enter a long trade. And remember, we're entering a long trade because we have momentum, because the path is clear. So when everything is up on the large chart, and guys, your large chart is going to be railing north, doing all those good things. When everything is up on the large chart, when the path is clear or has the potential to break on the large chart, your job, your pattern that repeats itself every day, is to wait for a reversal bar on the smaller, faster chart. This begins the pullback. When the reversal bar prints, you can define exactly where those down bars are most likely to go using large and synthetic triggers. The tighter they are one on top of each other, the smaller that retracement zone becomes, the less risk you'll have, the higher accuracy you're going to realize. But triggers don't create bounces. So inside of those triggers, somewhere below the highest line, above the lowest line, there needs to be a fib, a midband, or a yellow 1-to-1. Sometimes there's multiples, sometimes there's only one. If there's multiples, it creates a window. I call it the window of opportunity. So the market is most likely to bounce. The small crowd is most likely to fail. Somewhere between this midband, closest to the reversal bar, and these yellow 1-to-1s, furthest from the reversal bar. There's your window shaded in blue. Because of large chart advantages, because the market is going up, it is going up with strength, and there is nothing to create a bounce, you'll activate a limit order just at the top of that window, just above the highest point of support. And you will buy the market as this small chart is coming down. But as this small chart is coming down, ladies and gentlemen, your large chart is going up with strength and nothing in the way. So when everything says up, your entry pattern gets you in lower. When you feel like there's only a couple ticks to get to trouble, your entry sometimes triples, quadruples the room. Momentum never wavers. It's just a fluctuation inside of that one bar giving two advantages. In a short trade, everything says down. The market is pushing, the momentum is strong, the path is clear, and you wait for a reversal bar. You wait for a smaller, faster chart to go up. When the reversal bar prints, and guys, with a little bit of study, you're going to call your shots long before that reversal bar ever prints. You're going to say, where's that retracement most likely to go? Somewhere from the bottom of the triggers to the top of the triggers. Where's the market most likely to bounce? Embrace this phrase, at an area inside of that retracement zone, inside of triggers. Your job is to activate a limit order, a tick or two below it, to hope that the small crowd gets there, because the only thing you'll ever be in control of is whether or not your rules are met. And when you put the two charts together, guys, that tail on a large chart is the pullback to the area inside of triggers on the small chart. When the large chart says down, potential to break, your reversal bar is the bottom. This black box shows all of the action inside of that one bar. The market pulls all the way back to a mid-band inside of triggers. That's the top of your tail. And as it continues back down and exceeds that low, that's when the next bar prints. So all of the good stuff, one bar on the large chart, refine it on the small chart. Guys, are there any questions about momentum? Just a separation. You're going to have to study it. It's going to take a minute, but you'll get there. Can we reach an area and just count triggers? Triggers tell you everything you need to know about the area. And then finally, buy or sell a pullback at an area inside of triggers, guys. This is the recipe for the highest probability trend trade you can ever take. And on day one, you're going to be like, yes, I've got momentum. Day 2, 3, 4, I'm going to figure out these darn termination conditions. By day 5, I typically see you guys recognizing areas inside of triggers, whether you have the confidence to take the trade or not. Here's one of the cool things. There is this idea that successful traders, that confident traders, that traders that win more than they lose, manage their risk before they ever manage their profits. So you are managing risk by insisting on momentum. You're already managing your risk by not trading into an area that could stop the market, and you are managing your risk by waiting for the pullback to an area inside of triggers. And then your next risk management, guys, because you know where the retracement is most likely to occur, because you know precisely where the market is most likely to bounce through this one pattern, you also know where the market should not go. Because if that small crowd can push beyond the trigger lines, if that small crowd can push through the areas inside of those trigger lines, my advantage is gone. I don't want to be in this trade anymore, guys. And I'm going to put my initial stop about 5 ticks above that retracement zone, about 5 ticks below that retracement zone. And I'm going to willingly accept the loss that the market gives me if that is my fate, guys, because this is a pattern that typically wins 70 to 80% of the time, which means that it is obligated by mathematics to lose 20 to 30% of the time. It's a cost of doing business. Small losses are a normal part of a positive equity curve, guys. I can't stress that enough. Nobody in this room is a 100% winner. I've never seen it. But you can control losses by having advantages. You can control losses by managing assertively when advantages are gone. So that is the Ninja Trader run through, guys. So live chart read. There is no separation between the small and large. Therefore, I don't have rule number 1 met. I do have a clear path because all of my triggers are below support. You can see that it's behaving as a resistance. Guys, right now, the market is just pushing down, and it doesn't appear to be my money. Not yet. Whoops. This is the S&P. I love this. Smalls are down, large are down, but there's no separation yet. So I don't have the momentum that I'm looking for to push the market in the direction of the trend, which is down because of the background. Looks like they're trying to go up. I just don't have rules met yet. Does that make sense, guys? My large chart doesn't give me what I need right now to feel confident about looking for an entry. And I want you guys to see the magic of rule number 2. From fib to 1-to-1s, to fib to 1-to-1s, to fib, Potential to break did not, and guys, they are scrambling right now. They're making decisions right at these key areas. Maybe some of you found an opportunity to trade to the area. Maybe you found an opportunity to trade from the area. But guys, right now the S&P has a clearly, watch if I squish it like this, has a clearly defined range, and your advantages are going to start up again when they break outside of that range. That's kind of the magic of rule number 2, guys. It's going to keep you out of a lot of troubles. If you thought you were going to go down from an area inside of triggers without momentum, look what just happened. And the same thing may be true. If you think you're going to go up from an area inside of triggers without momentum, it's going to be hard to push that market. So that is Ninja Trader, guys. We talk about it every day. If you're new to this room, we talk about it every day. The same thing every day. Momentum, path, and entry. Momentum, path, and entry. If you are on TradingView, ladies and gentlemen, it's a little different scenario. TradingView uses minute bars. This is a 15-minute bar. This is your large chart. This is a 1-minute bar. This is your small chart. Looks like a mess right now, doesn't it? That's okay. With a little bit of practice, that mess cleans up. Large chart still leads the way, guys. Large chart still tells you if you have the momentum that you're looking for. Large chart still tells you if something's in the way. Your 15-minute chart is going to be the big slow chart that sets you up to go look for an entry. So in order to read these minute bar charts, it does have large triggers on it, guys. As a brand new user, I want you to ignore them. I want you to say, okay, I don't really need those large triggers. My small triggers will give me everything I need to know whether or not I have an advantage, to know whether or not I need to manage assertively. So this is your 15-minute read, ladies and gentlemen. It is outlined in the TV plan. It tells you that the 15-minute, let's see if I can make this a little smaller. The 15-minute chart is going to be your roadmap for key targets the same way your 13.2 is. Your 15-minute chart is going to show you potential turning points, terminations. The small trigger lines on this chart will define direction and overall momentum. So when we look at a 15-minute chart, the first question I want you to ask yourself is what direction are the small triggers going? So in this picture, and this is the same picture 3 times over, the small triggers are down. Does everybody see that the small triggers are going south? They're down, they're pushing down. There is nothing up about these triggers. Do you guys see it? Awesome. So as a brand new user, the easiest thing that you can do for yourself is only look for short trades. And we're going to see a good example of how it's easy to mess this one up because you form opinions. But everything, these are down. I'm going to go down with it. That's the easy trades. And then I'm going to ask myself my next question. There's 3 things that I ask. Second question is, where is the current price trading in relation to the triggers? Current price is highlighted here in the price bar. Does everybody see that the current price is right of those small triggers, to the right side of the triggers? That's what we call the weak side of the triggers. To the left of the triggers is the strong side of the triggers. If you are inside of the triggers, you're in a transition phase. And if you answer that question every time you look for a trade, where is the current price trading in relation to the triggers, it's going to set you up on how assertively you need to manage if you find an entry. So if you are on the strong side of the triggers, if you are left of the triggers, whether it's up or down, it's always left. Be aware of 1-minute trouble. Let me reboot mine. Guys, I'm going to reboot the Discord room real quick. We'll come right back to this lesson, but I don't want Paul to miss out. I'll be back in like 30 seconds. 30 seconds. Already coming back. Almost there. Can you guys hear me? Is that better? Yep, rock on. Let's get my screen back up. Let's get back to business. All right, Paul, are you good? There we go. I hope so. All right, guys. By answering where I am in relationship to the small triggers, if I'm on the strong side, same as Paul. Um, One second, guys. Let's see if that can get them. Guys, if you're ever with me, use Control Alt Delete, go to your task manager, and you want to kill it from here. You want to end that task. And what that does is that shuts down even the background instances that are running. That typically fixes any challenges. So hopefully that works. All right. Strong side, I'm going to be aware of 1 minute trouble, but guys, when I'm on the strong side of my triggers, that's when trouble on the 1 minute good morning cab is most likely to break. That's where the moves are typically a little bit larger. If I'm in the transition side, I'm aware of those 1 minute zones. I'm ready to manage at those zones, but there's still the potential for those to break. If I am on the weak side of those triggers, it's best with nothing in the way. I want my small chart in the direction I'm going, and I want a clear path to make sure, because when you're on the weak side of the triggers, that's when the 1 minute zones are more likely to create a bounce against you. And once I say everything is down, here's where I'm trading, I ask if there's anything in the way on my big chart. Is there any zone? Is there any one-to-one? Is there a divergence low or high? Is there a mid-band? Is there a VWAP? Is there a line that is not a trigger line that could stop my good time, guys? And if there's not, if I have room to make money to get to that line, I'm going to look for a rules-based entry on the small chart. So, large chart read. And this one's going to be really fast because the market just opened. Does everybody see that the small triggers are up? This is the NASDAQ. Small triggers are up. Let's do a snapshot because it's moving. Small triggers are up. That's the first thing. So the second question, and here we go, only looking for longs. The second question is, am I strong side? Am I transition side? Or am I weak side? So guys, what do you think as we go through and you're learning this? I am right of the trigger lines. Does everybody see that that's the weak side of the triggers? That's where momentum's going away, guys. Weak side of the triggers is where you are before those triggers roll. Nobody sees it? No, can you hear me? It's all right. You don't have to answer. You guys never have to play along. But if you do, you'll find that you get smarter faster. And then finally, is there anything in the way? Oh, and guys, there is days worth of room. That's the wrong one. There's so much room to get up to anything that could create a bounce. It has already been there, but there's tons of room if I find a long trade. So the rules for a long trade, guys, you're going to come to your 1 minute chart, and I want you to see all of this stuff in the way for a long trade. Small triggers are down for a long trade. Large triggers are down. Do you see how everything says your long trade is probably going to suck if you try to get in right here? If you don't now, you're going to see it soon, guys. Because we are weak, because everything on the small chart says down and there's not stuff and there's no clear path, guys, this would be the times where you would just say, you know what? I'm going to sit on my hands and I'm not going to attempt to go long. And look what happened. The market pushed down, transition side. And guys, we're caught in that same range that the ES is caught on. Crude oil. Let's look. We'll do it a little faster. Small triggers are down. I'm on the weak side of small triggers, and I've got all the room in the world to get to the next zone. I'm going to go to the smaller, faster chart and see if I can define an entry. Guys, there are two entry types that you'll take on TradingView. And you'll take them. You'll take trend trade entries from mid-bands and zones when the market pulls back to them. There is an HVA trade. Brand new users. I love this trade. I'm not going to lie to you. This trade gives you the opportunity to catch the reversal point right at the reversal point for the new users. And I should add this in here. You will fight the large chart. You will fight the large chart. You read that last night on the training? Awesome. And then guys, there's momentum trades, and those will come from areas and HVA lines. So there's two looks on the entry. And this is a pretty cool thing, guys. There's a trend trade look, and all the trend trade look means, let me blow this up a little bit. All the trend trade look means is that your small triggers have turned against you. So if I'm looking to go up, and the small triggers are down, this creates patience. This says, okay, the small triggers are against me. I'm not going to just enter at the area. I'm going to wait for a close on the correct side of those small triggers. I'm going to wait for a bar to finish, and both of the top corners of that bar are on the strong side of those small triggers. They're above the small triggers. And guys, that patience keeps you from getting run over. And I see people get run over every day fighting these small triggers. So as soon as they turn against you, pump the brakes, take a deep breath, wait for the pullback to an area because we need something to bounce from. Let it close on the correct side. Does that make sense, everybody? That's your trend trade look. There is a momentum look. And the momentum look, guys, the momentum look means that your large chart is down, and your large chart is strong, and your large chart has nothing in the way. And your small chart is mirroring that. Strong triggers, separation between the small and large. And you are going to, and this is such an important piece of it, guys, you're first going to let the price bars break below the zone, below the area. And then as it retraces to the area, as long as you have strong triggers, smalls below the large, smalls above the large, separation between the two, you can activate a limit order right at the bottom of that zone. You can put a stop a couple ticks above it. And what you're saying is that because the large chart is down and strong, because the small chart is down and strong, I'm going to get in with all that momentum, and my expectation is that that market's going to continue down with momentum. The second the small triggers roll against you, you're waiting for a close on the correct side. And this plan has a checklist for everybody. Here's your trend trade. 15, not trading into an area. 1 minute, not trading into an area. Buy or sell a close on the correct side. Even pictures, hey guys, check it out. This is what it looks like. Because the small triggers turn against me, I'm going to pull back to a mid-band. I'm going to take a close below. I'm going to look for the opportunity to go down. On the same plan, there's the HVA trade, there's the momentum trade. So guys, everything that you need to be successful with this software, everything that you need to find success as a brand new user, everything that you need, whether it is rules, whether it is daily feedback on everything that you do, the ability to get every question that you have answered. The only questions that don't get answered are the ones that aren't asked, guys. You have a plan. You have a coach. You have rules. You have spreadsheets where you can look at these patterns, where you can start to work on management, where you can see when you shouldn't trade anymore, where Nexgen users have presented 500 plus pictures, doing great things with this software. You have management ideas, and both of them had trade tracking sheets, so you can actually use a journal, track your progress, and even log in the feedback from class when you had looks or thoughts that needed a little correcting, guys. So this is my first hour every day. I give all of this stuff away. There is one thing that I can't provide. Can you use TradeZella to do this charting? Sword Trader, I don't believe TradeZella. I've never used it, but the indicators are not written for TradeZilla as far as I know. You have TradingView, and TradingView is the platform that you'll use with the Nexgen Pro Trader funding, which is giving away $50,000 evaluation accounts for new users right now. Cam says you can link your TradeAvate account with TradeZilla. There you go. Sometimes you guys are smarter than me. Guys, the only thing that I can't give you, Pete put it in the room, is time on the pond. I can't give you experience. I can't give you repetition. I can't give you the desire to study momentum. I can't give you the desire to count triggers. I can't give you the desire to wait for the entry. But I'm telling you, if you put the work in, if you get the feedback, if you follow the plan presented before you, more users find success than don't. Traders that are successful do the same thing every day. Traders that are successful don't enter because their mortgage is due. They don't exit because they're fearful that the market will turn against them. They have a plan, a written plan, a solid plan, a proven plan that they know wins more than it loses. And guys, I'm going to share one bit of wisdom from Mark Douglas before we take a little break. When you stop expecting to win every trade, when you stop focusing on the money, but you focus on the execution of the method, that's when you start winning most of your trades. And you'll see people in this room that are like robots. They'll present 50 trades over the next week, and 49 of them will look the same. And they will be managed the same, and they'll take profits the same. And I did a little experiment, guys, on the TradingView plan. I did a little experiment on the TradingView plan, and I said, can I follow this plan, the same one that I give you in the room, guys? Do you want to learn how to beat an evaluation? Follow the plan. And I said, can I beat an Apex evaluation, a $50,000 evaluation with this plan? And the answer is yes, I can. Can I continue to make profits if I follow the plan? The answer is yes, I can, because I did the study, because I read my indicators. I'll help you get to that point. Man, I want you to, Sword Trader. Until you can build your own plan, until you start to see more, why not do something that's proven? Why not have a checklist? Why not remove the opinion? Remove the fear, the doubt, the aggression. Make it very pragmatic. If then. If I have this, then I'll look for that. And if I have that, well, then I'll look for this. I'm telling you guys, there's an easy way and there's a hard way. I did it the hard way first. And Sword Trader, I don't know, how, are you like brand new with us? New users? For those of you that don't know, okay. I'm John Novak's younger brother. 2 years, awesome. The hardest thing you will ever do as John Novak's little brother is post in the room. To have a crowd of strangers know that even though your last name is Novak, you suck. And I did. I wouldn't follow the plan. I wouldn't write rules. I wouldn't take pictures. I wouldn't study the patterns. I wouldn't ask for help. And then the only pictures I would post in the room were winners. I would get lucky now and then. And I'm like, yes, I'm the greatest trader ever. But the reality is I went live with that luck and then blew out $5 grand in about 2 hours. And I don't want you guys to do that. So there is a path of least resistance, guys. It's up to you whether you choose to follow it. All right, there's my pedestal, right? The small triggers were down, but it was on the weak side of the triggers. Does everybody see that? Down, but weak. And remember that picture that says, hey, when you're on the weak side of the triggers, 1 minute areas are more likely to create a bounce. Does everybody see the 1 minute area that won't freaking stop bouncing from the weak side of the triggers? So Sword Trader, avoidable losers, right? Avoidable losers. It's not the $300 winner that makes you rich. It's not giving away 5 grand on the wrong trades. So we talk about the right trades. And it's still bouncing from the weak side. Consistency. Amen. All right, guys. I'm going to take 5 minutes. Look at that termination condition. My goodness, you guys knew where that was. Uh-oh. Somebody better post this. Does everybody see the momentum on the large chart? Give me a Y, NinjaTrader users. Do you see that price didn't reach resistance yet and all of your triggers are above the previous resistance? Can we say odds favorable momentum and clear path? Hell yeah, we can. What's it look like on a smaller, faster chart? Oh, those rotten sons of guns. You got it, Roy? Boy, that was a close one. That's one of those trades where you might get it and you might not get it. But there's your pullback. It's inside of the triggers, and it missed that mid-band by 2 or 3 ticks. I might have missed this one if I were putting my entry right at the mid-band. But sure enough, the pattern was true, right? What about this one that has smalls below the large that didn't reach the divergence 1-to-1 yet? Where did it pull back to? Pulled back to the area inside of triggers. It did go to the top of the retracement zone, but that's where it stopped and continued down. Not the prettiest trade ever, but the pattern is true, isn't it? There's your momentum. Haven't touched the next area, that's a target. Pulls right to the top of the retracement zone, but it sure did stop at a mid-band on the way. So guys, everything is patterns. It's 100% patterns. My pattern at 10 a.m. is I go stretch my legs. I take a second, I stand up, I walk away from my desk, because if you sit at your desk for 3 hours and your rules aren't met, you're going to start making up new rules, more likely than not. So when I come back, guys, the rest of the classroom will be dedicated to your charts, to your questions, to live chart reads. And if we see an instance where there is momentum, when the path is clear, if I get a pullback to an area inside of triggers, if this look fits my KISS plan, we'll take it, we'll put our stop where the market shouldn't go, and we'll accept our fate. I think we had news at 10 a.m., guys. That was my mistake. I should not have traded directly in the news. You guys, where were my reminders? Dang it, guys. Y'all were supposed to help me. And that is why we don't trade into 10 a.m. news. So Sword Trader, I'm going to give you my 2 cents on it. Moving from TradingView over to Ninja. Ninja, so it's funny because John Novak moved over from Ninja to TradingView because of stability. I don't think either is hard to learn if you keep it simple. I don't know. You had 10 a.m. Central. I had 10 a.m. Eastern, Andy. There's news all morning. Sword Trader, it's the same concepts. It's momentum, it's path, it's entry. Ninja Trader is notorious for crashing. And Ninja is a breeze, but it is notorious for crashing. That's why when John Novak started Nexgen Pro Trader funding, TradingView is the platform that he built it on because of the stability. 100 million users. Right on. I love TradingView, Sword Trader, but I'm just one person. This is my opinion. It's exactly what you pay for it. I think if you are like me, and when I say like me, if you get excited about your entries, one of my challenges is I jump the gun. That's my own shortcoming as a day trader. Is I get in too soon. Minute bars have a countdown. So if I'm waiting for a close below the triggers, I literally know exactly how long I have until that close happens. And TradingView slows me down. I already understand the indicators. But TradingView creates a little bit of calm, and I think that it makes the Nasdaq a little slower and a little more tradable, which opens up opportunities. So it's just my opinion. I think everybody has a different opinion. I think that if you have a solid plan, if you stick to your plan, either platform is everything that you need to find the potential to make $500, $600, $700 a day, which means that you never have to go back to the job. So um, it's all about following the plan. So guys, I'm going to take 5 minutes. All right, guys, coming back. So now we're going to go through what I think sets education apart. We're going to go through feedback. We're going to go through chart reads. We're going to talk about what you guys have done. We're going to go back to momentum. We're going to do the chart read the same way that it's taught every morning, looking for momentum, path, and entry. And guys, remember, I am not the trade police. It's not my job to tell you that you're doing it right. It's not my job to tell you that you're doing it wrong, because everybody's going to have a different trade plan. Trade plans are unique to you. What I'm going to do is I'm going to look at advantages, and I'm going to look at disadvantages, and I want to make sure that if you traded into a termination condition, that you understood that you traded into a termination condition. Or if you took a trade without momentum, that you understand that that trade didn't have momentum. Because remember, knowing what you're up against, knowing what is good, what is bad, what is for you, what is against you, that's what's going to help you understand how to manage a trade. So I'm going to click on a few, and then I'll scroll down and see if I missed any comments, and then I'll click on a few and I'll scroll down and see if I missed any comments. Paul got us going, and he said 15-minute strong side, down, strong side. And so, Paul, you say you took the HVA short. Now, guys, I'm going to give you a little insight on how these HVAs are formed. And you're in at 23, Paul, which is right here. Yeah, just through Discord, Sort Trader, you can private message me. You may need to add me as a friend. And then send the message. Guys, I will never send out friend requests. I will never message you and solicit you. But if you send me a friend request, I will always accept it, and then we can have conversations on the sidelines. Typically, Paul, HVA trades come from up here, right at the termination. So what you had, this was your down bar. This was the bar that confirmed it. And that's what created the pink line. Does that make sense, everybody? Your pink line is not created until a down bar confirms the breakout bar. So, Paul, getting in at 23, the HVA line wasn't quite there yet, I don't think. Unless you just got in when that bar printed. This bar was your pullback. Either way, it's a good-looking trade, right? You're short, life is good, and then there's your VWAP right at 14, which is right there at the very low of the move. So large chart targets, Paul, turn this trade into a 9-tick trade instead of, oh, you got profit target at 9.21. You were in at 23. I'm not sure that adds up. In at 23, out at 21 is 2 ticks. Could have been 9 ticks if you got out at the profit stop, at the target. Good stuff, Paul. And I think that's the exact same trade. 1 minute 1-to-1s, puny 1-to-1s, holding the line so far. The VWAP held the line. The VWAP created the bounce. The VWAP pushed it up. And if you took a close on the correct side of the small triggers from the midband, it traded right back to the VWAP when everything was still down. And then it pushed back up, no area to trade from. And by the time it got up here to 28, no entry rules met. Great trading, Paul. Nice job. Scroll up and let's find the next ones. And guys, everybody's different. Everybody's going to see things different, do things different, hear things different. My job is to figure out, congratulations, Pete. Funded account. I love it. Everybody's going to see and do things different, guys. I'm going to talk about the good, the bad. I'm going to talk about what was strong, what wasn't. So Pete says strong top, which means no triggers broke through resistance and it reversed the market. Odds favorable momentum, absolutely. And he says there's an awful lot in the way. Doesn't get in on the pullback, but rather gets in when all the indicators go down and rides the momentum down to the next line. Nice trade, Pete. Little unorthodox, not a high probability trend trade, but a good looking trade. All right. This is where, Pete, I'm gonna high five you and lift you up. You ready? This is where you and I share a moment. So guys, Pete loves to trade in determination conditions. Loves to trade in determination conditions. I'd say 60% of your trades, Pete, are in determination conditions. Because of the momentum, because of the strong bottom. He has reasons. Now, Pete, usually I see an entry right here that you have to sit through all the retracement back to the trend trade. And I noticed that there's not an entry there today. You waited for the pullback to the area and made all the money back to the area. So, guys, we as human beings rarely celebrate our own victories. Pete, I think that's a huge victory. Great job. Great looking trade. Great patience. You knew what you were up against. You took the perfect low risk entry, and it gave you tons of room to make money back to trouble. Nicely done. And then large chart still good. All triggers, clear path. And once again, instead of just jumping in, you wait for the pullback to the area inside of triggers, and it makes it easier for you to make money. Pete, really outstanding, man. And that's one of those things where I know what you guys do, and I know what you lean towards. And Pete, you overcame what I think was one of your few obstacles. Nicely done. And guys, this is all we're going to do. I love to celebrate victories. I love to talk about the good. I love to high-five you guys, to lift you up when I'm able. But I certainly don't mind correcting you, because correcting you is what's going to get you where you want to be. So, Paul. Small triggers up. I love it. Transition. Perfect. Nothing in the way. Absolutely. So, Paul, your first trade, and I don't know if you're in here, but this is a great lesson, guys, because there's some patience that comes with this. So the large chart's perfect. The first trade didn't pull back to an area. Does everybody see that? There's not one-to-ones or a mid-band or a zone or anything solid to create that ricochet. And sure enough, they come back right to something solid. Paul gets in a little late, but there's your close above. You're into the trade. Everything says up. And you said, and that's it. You said you exited due to 1 minute trigger stalling, and you lost 4 ticks. On this one, did you lose 4 ticks on this one, Paul? 39, 35, yeah. Because we're not trading from an area. The rules say, and this goes back to sword trader. You're like, can I use the plan? Damn right you can use the plan. The rules say pull back to an area, get a close on the correct side of the triggers. One tiny little thing that changed the whole dynamic of this trade. And then when it does pull back to the area, and guys, that is Upsville, population U. What did that one end up doing? 5:55 a.m. Did it end up going up? Just curious. I like to always come back and look and see. I love the beginning trades. I love even more to see the final result. There was the entry, and it went from 33 all the way up to 43. So $100 worth of profits. Nicely done, Paul. Did everything that your rule suggested it should, would, could do, and your execution was perfect. So, good stuff. Good stuff. Gonna scroll up and keep going. Guys, I love it when you show me the in the middle of the trade trades. It's really start to finish where the lessons are better. Unless you just need entry help, show me the trade from start to finish. And here, watch this. I even have a document about it. Guys, I make documents on everything. I'll drop this in the room for you guys. There's 4 different pictures that you guys can take. Take a pre-trade picture. This is for you. Were your rules met? You can go back and look at it without the anxiety of entering or losing a trade and make sure that you followed your rules. Take pictures during the trade. You'll use this for management, but after the trade, this is where you're going to go back. You're going to write your rules. You're going to make sure that there wasn't a flaw in the analysis. And then one of my favorites, and a lot of you guys do this, is the no trade. The time where you say, hey, my rules weren't met, I chose not to take a trade. And what you're doing in that instance is you are saying, I rely on my rules. My rules are my lifeline. They weren't met. I chose not to trade. I chose to take a picture instead. So take those pictures. And it's okay, Derek. You can always post them because we'll look at entries, especially when you're new, guys. We'll do them, and we'll talk, Derek, as well. So with everything up, with the momentum, Derek, did you recognize that you were trading directly into resistance? That would be the question. Because you're telling me that it bounced, but you're not telling me that you see that one. So did you see the resistance? I hope so. Why did you enter so far away from the mid-band? Because the mid-band gave you $120 worth of profit to get back to the area that you were trading directly into. Great entries create manageable trades. I like the 63, right? You thought it was past the resistance. So, guys, this is great. Derek, thank you for that. Mark, I thought it was past the resistance. When you say that, and let me just make sure that I'm in line, because the price bars started to get above resistance, you're thinking, okay, let's go up, right? Does that make sense? That's common. Cool. So, Derek, this is where we get to backtrack, and this is how the education works. Price reaches the area. That's what gets us counting triggers, Derek. It's the trigger lines that tell you whether it's a termination, whether it has the potential to break, or whether it's broken. So in your particular trade, every trigger line is below resistance, below the one-to-ones, directly into a termination condition. Does that make sense? And it looks like it may have, oh, that's the NASDAQ. And now we're starting to get above it, right? So what's cool, Derek, is that if you had taken the entry at the area inside of triggers, one contract comes off at potential trouble, and then your runner just got hit. Do you see it? But the question is always, do you know that there's trouble in the way? And because of that trouble, can you manage assertively? It's a beautiful trade. Nicely done. Does that make sense without sounding too terribly preachy? But that's why we post in the room, right? I just want to make sure that you know that it's there. Because if things start dropping right off of that fib, you're like, oh crap, that fib that could stop the market is stopping the market. I have to manage this a little more assertively. And give me a why, Derek. Pull back to an area inside of triggers. I know you probably saw it hit and then said, uh-oh, that was my entry, let me get in. That's what I did as a brand new user. There was like a 2-bar processing fee for me because I didn't know the patterns as well as I wanted to yet. Great job, dude. Great trade. And this is where we just talk about make sure you know what's in the way so you know that you can manage if something changes. And Derek, it never gave you a chance to change. Nicely done. I don't tell you guys to not trade into termination conditions. I'll just tell you guys if you traded into termination conditions. All right. 8 ticks. Odds favorable momentum, smalls below the large, 3 triggers through the area, potential to break. Guys, one of the biggest killers of the potential to break, it did work out. But Derek, will it work out? Hold on. Oh, you opened up a can of worms now. Trading into a termination condition worked out for you, right? Here, let me do this picture. I want guys, and I love it when you make money. Please don't get me wrong. You making money makes me smile. But rule number 2, Derek, is in play because probably 60 to 70% of the time when you trade directly into a termination condition, it's going to drain your account. Does that make sense? 60 to 70% of the time, trading into a termination condition is gonna ruin your fund. It's gonna take your money. It's gonna piss you off, and it's gonna send you into a spiral of revenge trading. That's why rule number 2 is in place. That's why at least waiting for the potential creates an edge. 36 times the rules kept you out of a loser. Luck is a rough trading plan, it really is. So I tell you guys that, and you're going to get away with one every now and then. You will. And I hope that you do. Because there will be times when you take the perfect trade and it loses, and that's just the balance of life, I suppose. But don't equate the money that you make as a new user with you being a badass trader. And it's such a common mistake. This is a book that my brother wrote. It's not a real book, guys. It's tongue-in-cheek. How to Commit Financial Suicide, Trading in Termination Conditions. I had someone in this room tell me once they lost 60 grand. 60 grand over the course of a week trading in termination conditions. That's a lot of money to give away when you see the line. So, 3 triggers through and all the momentum, 8 ticks. 2 divergences is hugely problematic. No areas inside of triggers, even more disadvantages. Are you with me in here? I want to give you guys a really cool reminder. You're in control. You are 100% in control of your entry. So with only the potential, with your small chart already losing momentum, and it doesn't look like you're even running synthetic. Oh, the white ones are the synthetics. Okay, so you did have an area right at the top. And 8 ticks, you've been around long enough. You know that deeper retracement is possible because of double divergence, right? It may push up higher. One of the things you guys can do, see the reversal bar down? See the confirmation from the areas, the market's starting to go in the direction of your advantages? It's actually a better entry than the one that you took. And this happens a lot, and it still gives you room to get down to the next one to make your 8 ticks. But what it does is instead of saying, I hope it holds, I hope it doesn't go up, I hope that doesn't happen, I hope life is good for me, you say, all right, these mofos are now going down with all that momentum and the potential to break. I'm going to go with them. And it's going to keep more hair on your head. Does that make sense, 8 ticks? And you don't have to, and you might be very comfortable sitting through the retracements. I hate being on the wrong side of the triggers, especially when I see my advantages going away. It becomes a much more difficult scenario to be consistent. But nice hold, good trade. And one of the things you'll notice on 8 ticks charts is that momentum is mandatory. Momentum is mandatory for him. Every trade he takes, triggers are screaming. And that momentum creates some serious advantages, guys. All right, Paul, let's see. Triggers are up. There was that trade, and then you went re-entry, but 1 tick short of profit, break even. Did you go long or short? Transition but up, exit due to 1 minute trigger stalling -4. So that was your long trade. Oh, that was your exit break even. Okay. And they just kind of did you wrong there, didn't they? But in at 15, or 35, made it all the way up to 43. And it did. It just kind of, everything set up and they pushed down. And they do that sometimes, free market. Great entry, though. Outer band would have been a reasonable exit. Paul, are you in here? And even if you're not, guys, let's talk about a cool way that you can manage. And maybe save a couple duckies here and there. On these trading view charts, Paul had every advantage going up. And he was 100% right on, at least looking for that outer band in this trend trade. And it was beautiful. But let me show you some cool things. The market went up, and it gave a little blip here where it comes down and then goes back up. And for me, that's a great spot to move my stop. So that gets me to about break even. And then it does it again with all that strength, where it blips down and then it goes back up. And for me, that's another great stop movement, about 2 ticks behind that one. So what I'm doing is I'm using that fight on the way down. The expectation is that the market's going up, the sellers test the water, and it pushes back up, new stop. And they test the water, and it pushes back up, new stop. So what you can do is go from original stop, now you got some money in the bank because there was a fight and a fail. Now you've got some money in the bank because there was a fight and a fail. And what happens is you end up getting out of this with commissions covered and stuff like that based on some little management patterns there. Good stuff, though. Guys, it's a great trade. It just didn't go the distance. Sometimes pre-market is a little more difficult. I don't trade a lot of crude oil, but everything was right on that trade, Paul. And I don't know if you're still in the room, if you're walking around, but good stuff. Your entries have been really solid. All right, Miss Jen. Let's click on all of yours here. All right, here we go. Here we go. All right, so, gotta look at your entries. So the small triggers are down. You are strong side of the small triggers. 95, and you are trading directly into trouble. So Jen, did you recognize that you are trading directly into trouble at 95, 75? Absolutely no room to get to something that could create a bounce? Okay, so you made the choice. So let's talk about great entries creating manageable trades. This was your close below the small triggers from the pullback. And that entry was somewhere up here with room to run. Does that make sense, Jen? That was it. You saw it. This great entry gives you all the room back to trouble. That's your day. You're done. Good stuff. You got in. HVA was waiting until price closed below and on the right side of triggers to ensure no bounce. You can't ensure that there's no bounce, Jen. You just can't. It's just that bar before it hit the zone. But where was price? Hold on. The HVA was at 98, right? But Jen, you were strong side of the triggers at 98. You had room to get to 95. Doesn't it make sense to give yourself more room to get there instead of trading directly into it? And here we're going to go back to the very basic lesson, Jen. And I think you're going to like this. You were strong side of the triggers, right? No, this was your entry, and then you got a whole nother bar, and you thought, oh no, that green line that doesn't have any rules supporting it might stop the market. What a great place to take first profits. Great place to take first profits. But Jen, if you go back to and you keep it simple, when you're on the strong side, that's the best chance to break. You're on the strong side. You've got room to trouble. This was your perfect trade. And if you got in at 03, you're 5 points in. You're $100 in by the time you get to the HVA. Take $100. Go break even from the perfect trade. And then your second trade is $160 better. Does that make sense? It's a beautiful look. Your entry makes no sense whatsoever. I can't find a checklist. You just kind of jumped in because you were afraid of a green line. And that's okay. You still made money with everything going down. You could have made a lot more money. Because the plan says with this look, who cares about that, right? Wait for the pullback, close below, great entries create manageable trades. Beautiful job. Nice job. And then the zone appeared after you closed the trade. If it was there, you would have gone until that zone. Right on. That's okay. Because look at all the trouble right here. It's all right to get paid at the bottom of that zone. 91. It's okay. You had a lot of trouble. Good job taking the money. Good job getting paid. And then the zone holds, right? And your small triggers roll. And you're the strong side of the small triggers. And then it pulls back, and there's just no room to go to trouble. And you say, I don't want it. Shenanigans. There's just no room to get there. I choose not to trade. Great job. All right, and this is the one for you new users. Trading against the small triggers. Oh, here we go, Jen. Trading against the small triggers is probably going to kill you more often than it doesn't. So, Jen, I love it. Not sure what I was thinking. But let me say this, ladies and gentlemen, no matter how smart you are, no matter how in tune with the plan that you are, no matter how good you are at trading, and Jen, you are that good at trading, there will be times where the small chart seduces you into a trade. So I'm going to show you both sides of this one. Triggers down. Weak side of the triggers, absolutely nothing in the way. Do you guys see the large chart read? Because the small triggers turned against you, you need to pull back to a zone or the mid band and take a close below the triggers for a short trade to go with the large chart. And Jen, you went long, and that's okay. And it was interesting because as that was setting up and you were gearing up for your long, this is the picture that I took, ladies and gentlemen. And Jen, look at how I called my shot when the market was down here. Smalls down, transition, nothing in the way. Since triggers rolled up, my next trade is from a mid-band or a zone with a close below. I called my shot. And then eventually that shot got there. And I took it back down. And I just took both contracts off at the HVA because it was transition, because it was weak. And the market did actually go down more. So you will get turned around. Jen, you are so good at this. You just got a little turned around. Absolutely you can, Junior. It'll be in here. It'll be on... let me give you the link just so you know where to find it. And Jen, it's okay. Sometimes we do that. Sometimes we get turned around. But one of the reasons that I talk about for you new users, if they're down, just go down with it. It'll eliminate a lot of opinions. It really will. Great job, Miss Jen. Thank you for posting in the room. Good lesson in there. And guys, this isn't a, oh, look at how good I am. This is because I know my rules. I know exactly where my trade comes from. I know exactly where my checklist is true. I know exactly what has to happen to take an entry. And it's kind of cool because you will get to the point. The same way on Renko, you will call your pullbacks to areas inside of triggers. On TradingView, you'll see these triggers roll and you'll say, oh crap, it's probably going to push higher. This is where my trade will come from. And I sat on my hands for a little bit, maybe 5 minutes, 7 minutes, 10 minutes, until it finally got there. And John Novak said, man, that's a good looking HVA. And I said, no, that's the long to get to the short. And it was the long to get to the short. And guys, that is just a byproduct of seeing the same thing over and over, of doing the same thing over and over, of memorizing exactly what your rules say, and then learning how to believe that your rules work. And that's the hard part, guys, is believing that your rules win more than they lose. But once they do, why would you ever hesitate, right? Why would you ever hesitate? All right, Pete. And then Paul. Everything says down. The triggers are strong. The market pulled back. You say that it pulled back well past the mid-band. So watch how I'm going to use a little language, guys. You're going to love this. The market could have retraced, per the rules, somewhere from the bottom of the triggers to the top of the triggers, right? The market could bounce from this mid-band, from this fib, from these one-to-ones. I don't know which one. Does that make sense, everybody? I can define the retracement zone. I can define precisely where it's most likely to bounce, and I know exactly where the market shouldn't go. So don't ever be surprised that it blows through a mid-band. Mid-band's just a moving average. It's a beautiful trade, and if you had gotten in on the way up, it's a little more money, stops in the right spot, but you still take the perfect trade, and you get paid beautifully. Nice job. Right to the top of the retracement zone. And that's exactly where I was going with that, Pete. You can define exactly where the market is most likely to retrace using these triggers. That's why the initial stop is 5 ticks beyond those triggers. Great job, dude. And when you know that, it's not as scary when it starts to push through the areas. When you know that's where the market could retrace, it's not terrifying when it's still in that retracement zone. I like what you do, Pete. All right, Paul, let's see what you did. Strong triggers. Well, it's either got to be strong or transition, right? So it is triggers down. Your entry is on the strong side of triggers, so it's a big fight. But because of the termination, because of the smalls above the large, you take a shot at the HVA for the reversal. And it is perfect rules met, Paul. It just didn't work. There was too much strength down. There's an indicator on Ninja Forum that shows the news alerts right on the chart 15 minutes before high alert. That's cool. Guys, I don't know if those are safe links. Diamond David, I know you're not a hooligan. But guys, be careful following people's links in the room. David's been around a while. He's good people. I'm not worried about him. But that's pretty cool. It is a news alert that comes up right on NinjaTrader. That's pretty awesome. That's pretty high tech. Some of you are techie people. I tend not to be the techiest of people. But that's pretty cool, David. Thank you for that. All right, let's do one more chart, and then let's do some live chart reads. Pete had an order, and it missed you. Those sons of guns. That was such a good order. And then it comes back, and you're like, okay, they got me. Another trend trade. Nicely done. Great job, Pete. All right, let's do a live chart read real quick, guys. So if the recipe for the perfect trade, I won't say the only trade, but if the recipe for the perfect trade is momentum, clear path, and entry, let's go through this chart read, guys. Do I have momentum? Newer users, do you see that the smalls are above the large? There is space between the large. Does everybody see it? Rule number 1 met, right? Cool. I'm going to say I'm working with momentum. And now the second question. Price reached Fibonacci resistance, and there's only one trigger line through, which means it's not even the potential to break yet. Does everybody see how the path is not clear? Price reached the area, triggers tell the story. I've got a brick wall in front of me. I'm going to just cover that one up, call it a termination. Now, some of you are going to say, I'll trade into a termination condition. Mark, you're not the boss of me. If that is your MO, trigger lines define where the market is most likely to retrace. Areas inside of those trigger lines define where it's most likely to bounce. If you chose to take the trade, that's the most likely spot for continuation. That's the area that could kill your trade. You would know all of that going into it because you identified this as a termination condition. Does that make sense, everybody? That was your crude oil read. Your S&P read says, thank goodness you didn't trade into a Fibonacci area because look at the reaction. I don't have momentum. The smalls are up, the large are down. I don't have a clear path. Price reached resistance, every trigger's below. Every trigger's below 1-to-1s. I can't think of a good reason to take a long trade. I can't think of a good reason to take a short trade. Does that make sense, everybody? 90% of your day will be sitting on your hands, doing nothing, relaxing, waiting, playing video games off to the side. Anything other than throwing money at a market that isn't giving you advantages. All right, scrolling up, scrolling up, scrolling up. Let's see what John Novak's doing. He refuses to annotate charts, but that's okay. Small triggers are up. Large triggers are up. No, large triggers are down. So he's working with a clear path. He's working with an entry. Doesn't necessarily have the momentum that he needs, but because of a great entry, his risk is low, and he's hoping the market goes up to resistance. 2 out of 3. Medium probability. And he says, did you guys read his comment on this particular trade? John Novak said, because it's not perfect, I'm going to force the small chart to go in the direction of my trade. He waited for a confirmation bar to take the entry. Nice trade, John. 2 out of 3, medium probability, manage assertively if need be. And I don't know if it ever gave you a management opportunity. All right, Miss Cindy. It went to the target, John? Cool. Did everyone recognize, and let's, hold on, Cindy, sorry, we'll get you 1 second. Not odds favorable momentum. Absolutely nothing in the way of perfect entry. 2 out of 3, medium probability. John Novak, will you give everybody in the room a why that you were prepared to manage this trade if something went wrong before the target? When you know what you're up against, ladies and gentlemen, second lower divergence stop. If he got a second lower divergence, would have taken him out of the market. Great job, John. Not that you need my attaboys, but that's an awesome lesson. 2 out of 3 can still be a great trade if you know what you're doing. How we doing in here? Trader Tony, you feeling good? BYU? How we doing? Brian, how we doing? TB50, how you doing? All my new users, guys, this class revolves around you first. Make sure you get the basic concepts. Let me know if I can help. Just started poking it in queue again. I like it. So Miss Cindy, strong triggers, absolutely no clear path, nothing that even resembles a clear path. So TB, are you on NinjaTrader or are you on TradingView? You're on TradingView. So strong tops and bottoms, my friend, are a reflection of NinjaTrader concepts. We don't really see them on TradingView because it takes too long for them to form. But a strong bottom, it means that price actually made it to this termination condition, to that fib, and then the market reversed. So the whole idea is that the market gets to trouble and then reverses from it, and the Rinkos are so much faster, you see that. So Miss Cindy, tell Bruno not a strong bottom because it's not coming from the termination. He does have momentum. He has 1,000 different things in his way. And he takes the momentum style trade beautifully and gets paid at trouble. High five him for me. Using momentum, room on the small chart, area for entry. And then third bar closes below mid and fib. I don't know what that means. You do have momentum. 3 divergences in the same price range says no more long trades. Only 2 triggers above trouble says no more long trades. But it's directly into a fib. It's against the up momentum. And that small chart entry results in instant annihilation. Fighting triggers. Fighting areas. Guys, just because your small chart looks good, if your large chart doesn't say go, that's the most likely outcome. Large chart leads the way, ladies and gentlemen. And then when your termination condition holds, and then everything starts to roll down, well, then there's an opportunity to go down with it. And that was a much lower stress trade. If it's really going to go down, it's going to go down. Good stuff, guys. Great trades. Miss Cindy, high five them on 2 out of 3 for me. Thump him on the nose for where he fought the large chart so hard, though. All right, Miss Jen. Zone in the outer band reached. That's a termination condition. So, TB, this is a good example. You reach the outer bands, no more short trades, right? That's your termination. And then the market starts to push up. The small triggers roll. And Jen says, with odds favorable momentum, with strong triggers, I'm going to buy the pullback to the HVA, but not really. I'm going to take it on the correct side of the triggers. So, Jen, I know you're learning the plan. So I want to go through and I want to go back to the large chart read. Small triggers are up. Does that make sense, everybody? Can you guys see it okay? Or do I need to make it a little bigger? Small triggers are up. Strong side of triggers. Nothing in the way. Give me a Y if it makes sense. That's the perfect look for a long trade. And the fact that we're coming from a termination is even better. So a little bit as the market works its way through, and then what do we get, guys? We're above everything. There's nothing in the way. And give me a Y if you see that the smalls are up. They're above the large triggers, which means strong triggers. And the market pulls right back to the HVA. If you go to your trading view plan, let me bring it up real quick. If you go to your trading view plan, ladies and gentlemen, I'm going to go to the checklist for a momentum trade. nothing in the way in the large chart. Strong triggers on the 1 minute chart. Buy the pullback to the HVA or area. So Jen, on this particular trade, because of your advantages, your entry was at 35, which is 8 ticks better than getting it on the correct side. And now the second piece of that is because everything's set up, strong nothing in the way, your later entry still makes sense. Actually, that was your entry right here. So you just jumped in again on the other side of a pink line. All right, we found your challenge, Jen. We found your pattern. So right here, Jen says everything on my large chart says up, right? John, I'm gonna fight you. But that's actually a good observation. That's a good observation. That's the I hope it doesn't go without me. That's the rules-based trade, right? Junior, take care, man. And if you listen to that video and you have questions, reach out. And great entries create manageable trades. Good stuff. Guys, one day, not today, we'll talk about the HVA breakout trade. For you guys that just panic and want to jump in. But Jen, good lessons today, but I think we found your thing. I think we found the one thing that's going to help keep you just a little bit patient. But you went the right direction, so great job. Guys, there's lessons in everything. Sometimes the lessons aren't even your trade. Sometimes the lessons are the trade that you didn't take, the look that you didn't quite see. All right, Ron, the old sell the mid-band till it quits working thing. Strong trending market, nothing in the way, sell the mid-band till it quits working. Great job. Everything says down, go down with it. Nicely done, Ron. It's weird seeing you take a trend trade. All right, Miss Jen. Everything is up. Strong side of the triggers. Room to get to trouble. Let's see. There was your momentum trade. And then look at that. Everything says up, and it goes down, 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 down. And it hits some stuff, but everything says up. And Miss Jen, there's your close on the correct side of the triggers. That's a lot of risk on that big old bar. And then everything says up, 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 up. And then it pulls back again. And that one closes on the correct side. So you say, I'm in. I'm in. Everything says up. It pulled back to an area. It closed on the correct side. And Jen, big old high fives. When you're on the strong side of the small triggers, these areas are more likely to break. So getting in on the correct side, room to targets, and being willing to ignore those lines because your large chart is screaming north. Nice job, Jen. Good patient. And sometimes, guys, when the market is screaming and scrambling, you're going to have a lot of risk on the NASDAQ. Yesterday, I refused to trade because the bars were all $300 risk. Nice trade, Jen. Nice chart read. And good job tuning out the things that were worth tuning out on the small chart. That's hard to do. You're on the prop firm start today. Just a question. Sometimes the CQG lags. Is that my computer? And then John just gave you the benchmark. All right, Pete. Everything says down. The path is clear. Can't take a momentum trade without momentum, right, Pete? But you take the entry. Take the loss. I guess that was a pullback. But no momentum for the momentum style trade. Sell the mid-band till it quits working. Nice recovery, Pete. Nice recovery. When I'm looking for a momentum trade, man, I'm looking for strong triggers. I'm looking for separation. I'm looking for a look that instills confidence in the downward pressure that market has given me. Great trading, Pete. Nice recovery. Jumping back in, taking advantage. All right, Caleb, Cav, let's see what you guys are doing. Caleb, triggers up, room to trouble, triggers up, room to trouble. You just jump in and jump out and make $100. So with momentum and nothing in the way, Caleb, you're telling me in your most sincere voice that if the market is screaming and there's room to trouble, sometimes you can just jump in and make a couple bucks. I like it. Guys, that's what we call the chili dog trade, and it relies on momentum and nothing in the way, and understanding that it's a short-term victory, so taking short-term profits. Thank you, Ron C., for the creation of that trade, and congratulations all of you guys that are translating it into your own version of it. All right, Cav. Strong top, odds favorable momentum. When it hits the mid-band and the large triggers are a full bar away, price is likely to close the gap back to the mid-band. You catch it just below, fighting everything. And you exit right back at trouble. Nice job, Cav. Little aggressive directly into a termination condition. Getting in on the correct side of the small triggers with the NASDAQ keeps you from sweating and hoping that thing doesn't go up and find the fib. It gives you just about the same profits. If you guys trade the NASDAQ on Renko charts, one of the easiest ways to get run over is to fight the small triggers. This is where the Renko bar charts and those 1 minute charts share a similarity. These are 13-2 small triggers on the NASDAQ. Your big chart is a 34.5. This market moves so fast. And fighting those small triggers is rarely advantageous. Getting in on the correct side of those small triggers tends to produce a little more consistent results. Everything says up, the path is clear, so not momentum, with a clear path, well-defined entry, quick money. Nice job, Cav. 2 out of 3, manage assertively. Everything is screaming. Nothing's in the way. Caleb, you and Cav are in cahoots, apparently. That's hard to say. Cave and Caleb in cahoots. Strong triggers. Everything's above trouble. Everything is absolutely railing. And Cav says, let's take a little chili dog and make some money. Nicely done, Cav. And that was the trade that he said profits reached. I'm going to shut it down for the day. And what time was that? I want you guys to really pay attention to this right here. At 10:31 a.m. Eastern, Cav reached his profit goal and shut down for the day. With a plan, with momentum, with path, you'll be absolutely floored at what you can pull off. John, everything says down, strong trending market, sell the mid-band till it stops working, get out of trouble. Beautiful trade, John Novak. He can be taught, ladies and gentlemen. He taught me. John says, bit of a counter trend trade. Based on my 15-minute chart, bought the area looking for an HV on the 1 minute, fibs for the last target. Looks counter on Renko, but it's not on 15. All right, so minute charts say, I love this. Minute charts say up. Minute charts say room to trouble. Minute charts say wait for the pullback and the close on the correct side. John does cut it a little bit using Renko. How did it do, John? How did it do? All right, Andy. Small triggers up, room to trouble, everything is screaming. Jump in at 14, jump out at 24. Andy has mimicked the chili dog on TradingView, and Andy, I think it's working for you. Trading with those small triggers is where it all starts, where it gets better. John, smalls below the large, room to trouble. You take a pullback right to the mid band. Doesn't quite get you, so you're in a little lower. When you get to trouble, you protect your entry, looking to hold for bigger trouble. It's kind of the same thing over and over, isn't it? Momentum, nothing in the way. Find an entry pattern. Does that make sense, everybody? Guys, if you're a new user, you're seeing people do the same stuff all day. Trading with the small triggers from an area, right? Trading with direction and momentum, trading from a pullback. It's just a pattern. Strong triggers, find a way to go with them. Everything says down, find a way to go short with it. Everything says up and strong, find a way to make money. Guys, momentum and path is amazing. Now here's the real question. Are you guys ready? Here's the real question. Why is John Novak, the CEO of the company, the guy that wrote the plan, why is he showing all these pictures with momentum, path, and entry? And the people that are learning the software are not asking questions. And the people that are learning the software are not saying, hey, Mark, I don't understand this. Help me out with this. Here's a picture of what I'm looking at on my chart. Can we talk through it? He knows what he's doing. With momentum and path, he's going to take a pullback to an area. He's going to take a little confirmation. He's going to get paid at trouble. He's going to protect his investment. He's doing exactly what I teach every day in this room with these trades. Does it work? Of course it works. We wouldn't teach it if it didn't. Does it work for you yet? Maybe not if you're not studying, if you're not asking questions, if you're not seeking clarity. All right, Paul, 15 minutes at the zone, 73. So down here, triggers are up. All right. So Paul, here we go. You're going to love this. Large chart says up, right, Paul? Everything about the large chart says up. We are going to fix what ails you right now. Are you ready for me? Once the small triggers turn against you, Paul, the second the small triggers turn against you, your job is to wait for a close on the correct side of those small triggers at an area. Does that make sense? If you fight the small triggers, my friend, you are more likely to lose that trade. If you fight the small triggers, it's going to be difficult to win that trade. If you enter on the correct side of small triggers, it goes right back up to trouble. It was a tiny little move. Your triggers remain down. Excuse me. Hits the area, closes above, but it has no room to go. The market continues down. Everything on your large chart said up, Paul, right? There's your next close above. Because the triggers are down, that little patience piece, right? Here your entry from 67 isn't coming from an area. You needed to let it get to the next area and then close above, and it goes up. And then it comes and retests the area with odds favorable momentum right there, and it continues up. And then it pulls all the way back to the area. There's that dance. And then that close up would have been impossible to trade. And then everything is up. There's your pullback, close above, and it goes up. So guys, when you believe that there are two entries that you can look for that offer the highest chance of success. And let's go back and revisit them real quick. Because I think this is the difference between hoping the market does what you want it to and saying, okay, if my small triggers roll against me, I have to wait for a pullback at an area and a close above. If I have strong triggers, I can use the limit order. There's 2 entries. And it'll take you a couple days. It'll take you a couple days. But you will get there. Paul, perfect large chart read. We're just going to work through your entry ideas a little bit. John, your charts are just over the place. 15 triggers say up. Even the Rinko bars support up. I don't know what kind of entry that is, but once you get back above and things agree, now you're going with everything, right? Nicely done. Trading with momentum. It works. It works. It works. Victor, funny story. Just got back from the doctor's office, got home, and Discord was on. Mark was talking. Your German Shepherd is sitting in front of the computer listening. I like that. I told you guys you should get so excited about momentum and clear path that when you say it out loud, your dogs will start to react. There will be a Pavlovian effect. That's funny, Victor. John, strong triggers, potential to break. You went long. Jen, he learned that from you. I love it though. Guys, everybody's going to make a mistake now and then. Everybody's going to make a mistake. Should we give John a load of crap? Why did you get stopped out so low? Why did it take so long to recover, John Novak? Let's put him on the hot seat, right? Preset was hoping for a pullback to get out. I knew that was the answer. I'm the king of that answer. Guys, you'll take the wrong trade sometime and you'll realize that you're taking the wrong trades. It's okay to just exit. It's okay to just get out of that trade. There's going to be this nasty little hope demon that sits on your shoulder. And John, I know this wasn't you, but we've all done it. You're going to say, oops. And then you're going to say, but what if? What if it goes up? What if it doesn't go down? What if I make $1,000 fighting everything because this is the one time that perfect pattern doesn't produce a winner to the downside, right? Or the 20 to 30%. And you'll hold the wrong trade based on hopium, smoking hopium. We've all done it though. Yeah, no, but that's what I'm saying, guys. We all make mistakes. And John, I think it is freaking outstanding that you'll walk in front of this room of people evaluating your software where you wrote the most brilliant plans and everything, and you still made a mistake. It happens. And notice that he's not beating himself up. He's like, oops, made a mistake. Let's move forward. I'll find the next trade. I did, Cindy. I can go back and do it again, or it's on the video. First trade, he traded into all the termination conditions, but it worked. Second trade, he fought the large chart and lost. Third trade, he let everything go in favor of his trade, and he was able to win. One lower probability trade, one fighting everything for the loser, one going with everything, fighting the easy winner. Good stuff. All right. Would this be good, the yellow dots? Looking for a chili dog even with the yellow dots. All right. So, Derek, this was Derek, right? I like that you're already looking for the chili dog. So I'm going to go through the rules. And then, guys, for all of you that are interested in the chili dog, when Ron created this trade, I thought he was an absolute, just insane madman. Who doesn't wait for pullbacks? Because I'm old and crotchety and set in my ways. So, Derek, let's go over the rules for the chili dog. And then I want you to help me with whether or not it fit the rules, okay? And guys, this is a great example of how rules are going to get you into the right trades. How a checklist is going to keep you out of the wrong trades. So number one, look for a spot that has wide open spaces, at least 24 ticks above you. right? So we're good. Look for the triggers to be stacked or odds favorable momentum. We're good. And now here's the key to the chili dog, ladies and gentlemen. And Ron doesn't write it on here. Give me a why in the room. Please, please, please. If you remember the idea that decisions are made at key areas, that the people in charge are more likely to react at Fibonacci, at one-to-ones, at divergence highs. So check it out. And before we get to the entry, I want you guys to see something on this chart. When it hit the fib, that tail was the spike down. That tail was the spike down from the next fib. That tail was the spike down from the yellow one-to-ones, from Fibonacci. That spike was from an area. That spike was from an area. So is everybody feeling me on this one? Those areas are where decisions are made. So check this out, Derek. Ron, in his brilliance, his unbelievable attention to detail, when he created this trade, he said, let the price bars break away from John Novak's Fibonacci, because John Novak's Fibonacci creates reactions. Let's throw John some props too, right? So he says, let's go ahead and let price completely clear trouble by a tick or two. And if everything is screaming and you're nowhere near a decision-making point, use a small stop because momentum is fleeting, take quick profits, and guys, that's your chili dog. It gets you with momentum away from anything that can create a bounce on either chart. So Derek, what do you think? Does it fit the chili dog here? Not so much, right? And it stinks because, man, there are going to be times where your gut's going to tell you, this is it, don't miss out, you're going to get left out, why aren't you in this trade? And there's a lot of waiting in day trading. There's a lot of sitting around doing nothing in day trading. But what we do for you guys is we give you the ability to recognize a pattern. We teach you how to capture based on that pattern. Every day, rinse and repeat. And it's a lot of fun. All right, Miss Jen. Let's see what you did. You're welcome, Derek. Keep those questions coming. So, Derek, you're about a week and a half in, right? Remember when it was like reading a different language? I might as well have been speaking Chinese to you. And you're like, oh, man. And I told you, when you start to focus on a couple things, it really does start to click. So if you guys are new, I want you to realize that it all comes back. All right, Miss Jen. Weak side of triggers, right? At 01. But long trades. No, it takes a little bit. Odds favorable momentum. All right, Miss Jen, give me a why, if this makes sense to you. With strong triggers up, or with smalls up, with nothing in the way, if you have strong triggers, your entry is the pullback to the zone at 93. Does that make sense, everybody? With smalls above the large, this is your entry. So Jen, from the weak side of triggers, by getting in at 0160, that zone, because of the weak side, is more likely to stop the market. And it did exactly stop the market. You got paid at it, and then you gave it all back on the second contract. And I'm telling you guys, trading view's a little different. And if you're used to Renko, you're thinking, man, momentum's going to break, momentum's going to break. If you identify that you're on the weak side, getting paid at those areas tends to put more money in the bank. Those aren't your home run hits. Jen, great job. Great chart read. A little late on the entry, but you're still learning to trust the entries. That's okay. Let's see what John did. I expect to make at least 7 mistakes around. Therefore, when I make a bad shot, I don't worry about it. It's just one of those 7s. Thank you, Walter Hagen. Good stuff. Morgan says, just starting NASDAQ again. Any pointers to look for on market flow are great. Just finished rewatching and going through the volume analysis training. So, Morgan, I'm going to do 2 things here. You have strong triggers. You have all the potential to break. You have strong triggers. You have no divergence. You have stacked areas. And you could even take the close on the correct side and have tons of room. Do you need the market flow chart to take this trade? Of course not. What does the market flow chart tell you? All it does is it confirms that you do, in fact, have a metric ton of momentum. Why do you have synthetics on your market flow chart? Small and large. Strong triggers. Pull back. It's a beautiful trade, Morgan. You didn't need market flow to tell you that. But if you were a little nervous, right? If you were a little nervous, white bar into the entry area is awesome. It creates that market flow signal. So you could wait for that signal. If you were nervous because it was only the potential to break, you could wait for that bar to print, for that signal to produce. It doesn't guarantee a winner, but it's a little quicker confirmation. Because look at, everything is screaming down. Back when I first started teaching this room, Morgan, 5 years ago, 5.5 years ago, every trend trade, the market flow was a part of it. Yeah, because then your stop is right behind the market flow bar. So that's one way that you can use it, Morgan. Good stuff. Miss Cindy. One-to-ones hold. Smalls are down. He needed a talk on this one. All right, so Cindy, we're going to go through it. We're just going to talk about what we see, right? Large triggers are up. Not a strong top, right? Because the small triggers went through. Because this is a weak bottom, not a strong bottom as he thought, this is more likely to fail. So here, his second trade, I know, I remember, you've already posted this one, but we'll do it again. Do you see the triggers up on the second trade? Large triggers are up, smalls are above, every indicator is above the fib, and he went short because the small chart looked pretty, right? And got stopped out quickly. But then, as the market comes down a little more, the large triggers roll, you get below the synthetics, he tries it again, and he's still trading directly into Fibonacci. He's still trading directly into Fibonacci with all of the indicators above it. It's a risky trade. Doesn't have odds favorable, doesn't have a clear path. The only thing he has is an area for entry. And it worked out all the way down to the fib. Does that make sense? None of his trades worked with all the advantages. Here he had momentum, but he had 1, 2, 3 termination conditions in the way. So he goes to the small chart, and he takes the perfect momentum trade. And he has room on the small chart to get up to trouble. But there's a lot in the way. Any one of these fibs could have stopped the market. His momentum carried him up to the further edge. So when I look at this chart, he just really wants to be in the market, right? He really wants to be in the market. And there's easier trades. There's such easier trades. But like John said, you can do whatever you want with the software. Whatever setups make you feel great, whatever time frames make you feel great, whatever type of bar makes you happy. It's America, baby. You are free, free, free. Pick something and perfect it. Once you have one perfect trade that makes you money, look for a second. Guys, Nexgen does not give out trading advice. This is life advice. Be really good at one thing. Force one thing to serve your needs before you try to add the second. Otherwise, you're going to start confusing looks and trades. John, into a termination, right? Pulls back, and your 15-minute chart supports more down. So you go down from the correct side of the small triggers with room back to trouble. That's where you end up, ladies and gentlemen, when you learn to read your charts. That's where you end up as a chart reader. Well, I didn't know. How would I know that was the 1 minute? John comes in here just to see if he can push my buttons. Not really. All right, let's see. Weak triggers, strong triggers, potential to break. I love this. The market says can't decide, can't decide, can't decide. And then when all of the indicators agree, strength, 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 there's that momentum style entry again, little snapback, beautifully executed. Out at trouble, and then feeling like with absolutely no triggers through that trouble should break. All right, Cindy, I'm going to show you something. John Novak did this to me once. There was a giant fib at 66. The second exit is 6 points below. So that is 6 points at $20 a point is $120. Take care, Andy. Now let me show you what John did to me when I was learning to manage. John pulled out a calculator and he said, Mark, you see Fibonacci, you can get paid at Fibonacci. If you give back $120 every day for a trading year, it's $30,000. Once you believe the next trade is coming, guys, once you believe the next trade is coming, you don't have to give that much back. So I'm going to give you a little management tip, and pass this along, please, Cindy. If I hope this area is going to break, see if I can spell. I'll hold until I get a close on the wrong side of the small triggers. So you still may give back a little bit, but what happens, look what happens when the market closes on the wrong side of the small triggers. Down it goes, and it continues to go down until it closes on the wrong side of the triggers, and then it continues up until it closes on the wrong side of the triggers, and then it continues down until it closes on the wrong side of the triggers, and then it continues up until it closes on the wrong side of the triggers. And you can't tell if an area will break as you reach unless you have something else bigger, time frame. But this is the biggest time frame. This is a 34.5 with every trigger line below it. What a great exit. One of the things that you learn is where the market may go, right? And it's okay. The market hasn't flatlined in 5 years. I remember crude oil did it. If it's going to break, it'll break. All right, Andy. Small triggers are up. But your small chart has all the momentum, so you just jump in and take it to trouble. Nicely done. You probably didn't hold for a bigger move because you had all sorts of stuff in the way and your triggers were up and you were coming from a termination and you rode the momentum down to trouble. Great job, Andy. Great job. All right, Victor. Small triggers are up. Price is on the weak side of small triggers, right into an area that could stop the trade. No need to go to the 1 minute chart, hands in pockets and waiting. Did I read this right? Absolutely you did. 63.10. I can't see 63.05, so 63.10, Victor, is right there at trouble, right? Small triggers turned against you, no room to go, don't have to take a trade. Victor, 100% perfect. 100% perfect read. Take TTFM is take the freaking money. But depending on your disposition, you may not say freaking. John Novak. Thought I was going to miss. Paid more up top. Put stop where the market shouldn't go. Got paid. Nicely done, John. That's that fear entry. That's that fear entry. Or is it because of the advantages, willingness to make sure the trade doesn't miss me? Entry. Depends on what you're looking at. John Novak says, I don't know what you're saying. Short warning. I don't know what that means. Small triggers are down. Rinko Bar says down. And yeah, John, that would be 100% chili dog. Ron, check it out. John Novak just took your trade. Odds favorable momentum. Room to trouble. Get below trouble with strong triggers. Take it to trouble. Holy crap. Oh, man. John, you just chili dogged. Nicely done, Novak. Making me proud today. It's the big one. Lamont. All right. Small triggers down. I'm sorry, Jen. I'll get you. My apologies. Thank you for letting me know. Small triggers down. Everything down. Everything down. Pull back to the area. Go down with it. Nicely done, John. Would you repost it for me? If you want. Or I can scroll up. Either one, whichever works for you. I love it, John. Small triggers are down and you're going down with it. Find a way. Beautiful, beautiful word. Guys, all right, we're going to do Jen's and we're going to do some live chart reads. All right, Miss Jen. Whoa, what did I do? Here we go. Zone reach. So small triggers are down. 05. You are trading directly into areas. Was that your long, Jen? Into 08? I'm confused. Hold on. I may need to get a little clarification on this one. I see the long trade. Okay. Question is, I am generally selling too late on this bar. Do the rules say sell at the HVA? Makes sense, thank. Yes. Jen, with strong triggers. With strong triggers. So let's really embrace that little bit of language right there. Let me pull up the look real quick. All right. So Jen, large chart's down, right? Large chart, strong side, nothing in the way, everything says down. And Jen, you are looking for, you see that HVA, and you're like, oh, that's a short, right? And you may not go, whoa, that's me being me. And you're like, I can't wait to sell the ever-loving snot out of that HVA. And part of your brain, Jen, is saying, okay, but I need a close below triggers. That's where you're struggling right now with it, correct? So we're going to change your idea on these entries. Give me a Y if you see that you do in fact have odds favorable momentum, strong triggers, small below the large, everything is great. Best of the best. Your limit order goes right at the HVA. Your limit order, you're going to sell that pullback because of the momentum, and you're not even gonna do the mash the button up here thing. You are literally, let me open mine up. If I had odds favorable momentum, if the trade were right, Jen, you would wait for the market right there. Oops, I'm not even in paper trading. You would activate a limit order and you would say, come get me. Because of those strong triggers, this is the only one, the HVA or momentum to pull back to an area, because it doesn't have to be an HVA, right? It could be an area, it could be one-to-one. So if I were going to take this pullback to the zone with strong triggers, Jen, I would literally have a buy limit waiting just above the zone. I would have my stop a couple ticks below the zone, and when it tries to go up and fails, closes back below, right, I might take a small loss and have to wait for the pullback and the close above. So it's the same idea on NinjaTrader. The same idea that if your momentum style trade fails, right? So if let's find a good example. If I'm in a momentum style trade and it fails, but everything is great on the large chart, very often it's going to pull back. And that's where the second type of entry comes in. I love this. What a great lesson. That's where the second type of entry comes in. When those small triggers turn against you, you say, okay, I'll wait for it to pull a little deeper. And when you go through that idea and you start to believe that there's only two entry looks, one of them gives you the ability to use a limit order because of strong triggers, and the other one, as soon as the small triggers roll, you start calling your shots. You start saying, okay, I'm all the way down here at 24, but those small triggers roll. I have to pull back to an area. I have to wait for the close below. Great question, Jen. Thank you. I'm sorry I missed that. But does that make sense, everybody? You can use that limit order with odds favorable momentum. Once those triggers pinch and roll and start coming against you, it turns into the trend trade style entry. And when you talk about this trading view plan, you guys go into the prop firms. Trade with the small triggers, right? That's the easiest trade. Know how you're going to have to manage it based on price relation. Don't trade in the areas. And know that if those triggers roll, it's okay to be patient. You can literally draw a box around an area and say, I want it to get here, and then I'll take an entry. Or I have all the strength in the world, and right here you'll say, man, if they pull back to that zone with these strong triggers, I'm in. I can't wait to be in. So the trend trade is going to happen a lot. The momentum trade is going to happen a little bit less, but it's still going to happen a lot. The HVA trade, brand new users, what a great way to catch a top and bottom, but until you're good at the other two, that's the one that's going to probably not win as often. All right, Miss Jen, why don't you annotate your large chart? So let's see. Looks like the triggers are up. Looks like there's nowhere to go. They're trying to turn up. Okay. So because they roll, you would wait for the close on the correct side. Absolutely. That's a perfect example. I'm trying to make it harder than it is, right, Jen? That is the perfect example. Because the triggers roll, I wait for a close on the other side. So we could do this. What market is this? This is crude oil. And we won't even look at the large chart. But I want you guys to just see how often this happens. Because the triggers roll, I need an area and a close on the correct side, and then it starts back up. Because the triggers roll, I need an area, close on the correct side, and then it starts back up. And I don't know if this is even real trades, right? Because the triggers are down, the smalls are down, I need an area, and I need a close on the correct side. Over and over. Does that make sense, everybody? All of my TradingView users, does that make sense? Even if I were waiting for the short, because they go up, it doesn't start going down until it closes on the other side. And as it's going down, see, ooh, here's a good example. Check this out. Here's a bounce from the area. Let's make that smaller. That's kind of kooky. And then as it's pulling back down, you're saying to yourself, I need a close on the correct side from an area. Get that language. See how that close on the correct side is not from an area? And what do? They find the area. They find the midband. And then they close on the correct side. So that language becomes important. Not just a close on the correct side, but a close on the correct side at an area. Areas create bounces. Closes on the correct side keep us from fighting the immediate momentum. Pretty awesome, right? And you're not taking the momentum trade here because the triggers are up. You were waiting for the long trade. Love this stuff, guys. I'm telling you, TradingView gets easier if you keep it simple. These minute bars give you tons of information, but they are big bars. Use the triggers. The triggers are still down, right? They have not pinched. They have not rolled up. Everything on these triggers says down. I'm not looking for a long trade. I don't want to go long into resistance. What am I looking for? I'm looking for maybe an HVA trade off of the termination with down triggers. But guys, there's nowhere to go because there's a big ugly VWAP. So until I get out of this box, I'm going to sit on my hands and do nothing. Does that make sense? I've got a tight little range between 15 trouble. It's okay to break out of it. What a great time to go make a sandwich. What an awesome time to go text your spouse and tell them they're pretty, right? Trouble on the 15-minute has let me know that I've got nowhere to go. And if you don't believe it, look what it's doing over here on the 1 minute, right? So let's wait for a break above with the small triggers up, or let's wait for a break below with the small triggers down, and then we'll get back to following rules. Does that make sense, ladies and gentlemen? Gentlemen and ladies, dudes and dudettes, people and persons. And I know that when I talk about the charts, guys, when I look at a chart, I make it sound like it's the easiest thing ever. Oh yeah, they're up, they're strong, they're selling the way, blah, and it takes 2 seconds. Guys, that speed comes from practice. That speed comes from simplicity. If I know that the only thing I'm supposed to do when I go to look at my charts is go through this little checklist, right? This little bit right here that says this is 100% how you read your chart, what your read means to you in terms of management. This is what sets you up to go look for a trade. If you adhere to that and you just forego your opinions, life gets easier. And then if you believe that there are 2 types of entries, one that forces a close on the correct side, one that allows you to use a limit order, it takes a lot of the gray area out. And then all you have to do is stare at your checklist and say, okay, did the 15-minute not trade into a zone? Of course it didn't, because my large chart read said that it didn't. My 1 minute's not trading directly into a zone. Awesome. Life is pretty good. Buy or sell a close on the correct side of the triggers at a mid-band. Yeah, I can do that. And I can find the success that I'm looking for, guys. And I don't have to form opinions. And I don't have to hope that things happen, right? And I don't have to wish that the market would break. I just wait for it to break. I can wish. And I know it's just oversimplified, right? The way I'm doing it, you're like, Mark, that's too easy. I had a guy on the phone tell me once, Mark, 3 rules is not enough rules to make money. There may be someone in this room that believes 3 rules is not enough rules to make money. I'll disagree. I'll challenge anybody in this room. Follow the KISS plan on NinjaTrader to the letter for a week. Tell me if you made money or lost money. Follow the TradingView plan to the letter for a week. Tell me if you lost money or made money. Guys, tell me what your percentage was. Don't let me tell you what the percentage is. But the only way you can follow the plan, and here's the kick in the teeth for a lot of you guys, the only way you can follow the plan is if you learn the rules, right? If you know what it looks like. And until you know the rules, I'm your guy. Come to my room, post in my room, ask 1,000 questions. It sucks to be frustrated, but it sucks worse to have a coach standing right in front of you and you refuse to ask for help. Every professional sports player has a coach that stands on the sidelines, that looks at what they do, that helps them do it better, guys. I'm your coach. You're my Michael Jordans. Keep it simple. Keep it focused. Learn how to make money on one trade. And hell, you might not even want the next trade. You might just say, I'm winning 80%. I'm making $200 to $300 a trade. I'm just going to copy it on 10 accounts. Did you guys know that you can do that? You can use a trade copier, and that $200 on 5 accounts turns into $1,000. Same trade, just spread out. All right. Nothing like ending from the pulpit, right?